Welcome guys to a video where I'm going to be talking about call options. Now, buying call options is something that is actually one of the most powerful strategies known to man in option trading. If you think about the most simplest thing that you can do, it's buying a call option and making 5 or 10x your money. That is very possible, and there are very different scenarios where this is a very viable strategy. Although I usually talk about option selling, I do not want to ignore option buying. So we're going to be talking about NVIDIA in this video because NVIDIA specifically has very strong momentum. When a stock is moving up, it's actually a very good idea to buy a call option. The reason why it's good to buy a call option versus buying shares is that call option gives you huge leverage. So you can make a lot of money quickly on a call option by putting up very little money into it versus having to buy 100 shares. If you buy 100 shares of NVIDIA, you're gonna have to pay $95,000. Now, most people don't just have $95,000 laying around. However, in many scenarios, and if you look at the option premium, it's only 10 bucks to control 100 shares of NVIDIA stock. So you can literally pay $1,000 instead of $95,000 to get the same benefit. Now, I'm gonna show you right now what that's gonna look like on a payoff chart, okay? I'm gonna show you how to manage a position like this, because specifically when you buy a call option, it's not best to hold the position until expiration. What you want to do is you want to manage this position and properly take profits. Now, taking profits is the most important thing because some people never take profits. They just get too greedy. They just hold, and the option ends up going down and they end up losing money. Or in the other case scenario, they make money, but they only made some money. They're happy and they just get out, and the option still goes up a lot in value. They miss out a lot of the upside. So it's very important to understand the payoff chart. And I'm going to talk about how to manage buying a call option and when are the best scenarios and positions and best stocks to buy call options on, okay? So the first thing is right here, this is going to be our zero, okay? So this is $0. And as soon as you buy a call option, you are spending money, okay? So you have to spend money basically. So we're going to be down $10, all right? Or since each option is actually 100 shares, you're going to be down $1,000. Again, that's okay as long as NVIDIA goes up in this example, okay? So starting off, you're gonna be down $10, okay? And if you buy the 950 strike, okay, that's why I have 950 right here. We're gonna use the strike price of 950, okay? What you want to happen is you want NVIDIA to go up in value. You want the stock to rise. So if the stock rises, then you're going to be profiting with the stock. However, the option is actually going to profit a lot more. And I'm going to show you some different scenarios, what's going to happen to the call option if you're buying the call option. So see how this right here, you lost $10 no matter what happens as long as NVIDIA is below 950. So when the stock is below 950, your call option can't be exercised. You can't really do anything with it. It's worthless because it's out of the money, or OTM, out of the money. Okay, but once it goes to 950, it quickly starts to increase in value, it starts to make money, okay? So as NVIDIA goes up, then the price of this option also goes up, and it's going to specifically break even right here. Now, this break even point right here is going to be 960. That's because your strike price is 950, you pay $10, and 950 plus $10 is going to be 960. All right, so this right here is going to be 960. All right, so that's when your break-even point is. But now you have unlimited upside, okay? With a call option, you have unlimited upside. It keeps increasing in value as much as the stock goes up, okay? But again, you have a really big leverage factor. I'm gonna give you different scenarios of how much money you can make here, okay? So specifically, if NVIDIA goes to 970, okay? If it goes to 970, then you will have a profit of 970 minus 950, okay? You have a profit of $20, but you've paid $10, okay? Because you've paid $10 and you now have a profit of 20, you have actually doubled your money. You went from $10 to $20 in profit. So you have a double when the stock just basically moved up by, just a couple percentage points. So a 2% move or a 3% move sometimes in a stock can give you a 1 or 2 times return on your money. Now, if NVIDIA were to go to 1,000, and we know that this is possible, okay, NVIDIA has very strong momentum. This stock actually has earnings in the near future. Or you can also use this example on any stock. And specifically, I actually like buying call options right before earnings. The best strategy is 3 days before earnings, you buy a call option. And then into earnings, you hold that call option. And the next day after earnings, if the stock goes up, you close out that position. It's a really smart strategy that I've seen over and over again traders use at Goldman Sachs, as well as other jobs that I've had. I've seen traders buy a few days before earnings. They get that really big pop on the stock, then they just get out of that position. They take a profit in just a 4-day span. So for me, buying call options can be a very good strategy before earnings. It's also a very good strategy before any events in the market. So if there's going to be any FOMC events, if there's any interest rates events, anything like that, buying call options is very good. Also, buying call options is very good on high momentum stocks. So taking a look at NVIDIA, this is a high momentum stock. You want to pick a stock that's actually near its 52-week high. This might sound crazy to you, but a stock that keeps going up is likely to continue going up, which is why that could be a really good candidate for buying call options. Now, specifically, if NVIDIA goes to $1,000, then this is going to be very interesting because now you've made $1,000, okay? Our strike price again is $9.50, all right? $9.50. So we have made $50 while we've only invested $10. So you can take a $10 investment into $50 or 5x your money, and that can happen in 4 or 5 days if you play this during earnings. Now, if you're not playing during earnings, that's okay too. You should be buying call options that give you at least 2 to 4 weeks, because 2 to 4 weeks gives you enough time for the stock to have some volatility, okay? If you do short-term call options, you just buy a call option one day, there's a very low chance that that stock's gonna pop up in just one day without an event. In fact, the chances are next to nothing. You're basically, buying lottery tickets. That's not gonna work out very well in the long term. You're gonna be a long-term loser. However, if you're buying call options, it can be very smart 2 to 4 weeks on non-earnings events or during earnings events. You just buy that puppy right 3 days before earnings, hold into earnings, and then one day after you sell. And again, you can get a return that's very similar to this, where you put up $10, the stock can go up to, it only has to move about 5% for you to realize a $50 gain in this example right here. But I've seen this over and over again. I've seen people grow their accounts very aggressively. Now, it's very smart to manage the position correctly, okay? So let's talk about managing as well as risk. How much do you actually want to put into a position like this? Because if you put all your money into this position, you're gonna blow up your account. So the best thing to do with buying call options, the best way not to blow up your account, is to put 3 to 5% of your money in every single call option, okay? You do not wanna go more, because any call option that you're buying, you can lose the whole entire amount, okay? These things don't always work out, and specifically, if you're buying out of the money options, your chances of success are going to be less than 50%. So if your chance of success is 30%, you really wanna bank on 3, 4, or 5xing your money, because sometimes you're gonna lose 100% of the call option you bought. Now, there are ways to mitigate your losses, specifically if an option is not going in your favor and is going to the downside. And for example, let's just say right now that NVIDIA, you bought the call option, let's say it's a 2-week call option, okay, on a non-earnings event. All right, so 2 weeks call option, and this stock is, it was trending somewhere around 950, but then that stock is somewhere around 925, okay? If the stock's at 925, your chances of going to 950 are gonna be slimmer and slimmer as time goes on. You see, you don't wanna hold call options if you don't think a stock is going up. If you don't think a stock is going up, it's showing negative signs, it's really going sideways, you do not wanna hold a call option, because every day that you hold a call option, it's actually losing value, okay? You're losing value. The reason why you're losing value is options have something called theta, or time decay, okay? Option buying can be risky because theta and time decay works against you, okay? Every single day, these options are losing in value, okay? So if it's not near 950, then it's losing a lot more value. That theta is gonna be a lot higher, okay? The theta is gonna be high, it's gonna be kicking in. Now, theta can also be high at the money, okay? Specifically, when it's at the money and expiration is approaching, it will also be very high. But if there's 2 weeks left, okay? 2 weeks, it's at 925, this option has lost 20 or 30% of its value. You don't think it's gonna go to 950 or higher, then it can be a very smart move to just cut this position and take a loss, okay? I will prefer taking a loss of 30, 40, or even 50% is okay, as long as you don't take a full 100% loss, because when you take a 100% loss, it is very difficult to recoup your money. Again, this strategy can give you a return of 2, 5x. I've seen this strategy return 10x. I mean, we've seen stocks that have popped up so much, specifically NVIDIA. Had you bought it like a few months ago when it was at $600, you bought a $700 call, you would probably be up 50x, 100x. When a stock has so much momentum like NVIDIA, that's when you can make real money by buying call options.